If you already own Bitcoin, known as the king of crypto, or you want to buy the world's most well-known digital asset, you'll probably be interested in Finder's quarterly Bitcoin price predictions. We survey a panel of 25 crypto industry experts for their thoughts on how Bitcoin will perform through 2035. They think Bitcoin will be worth just over $161,000 on average by the end of 2025. Looking further ahead, they say Bitcoin will rise to over $405,000 by the end of 2030. Then they told us it will skyrocket to an average of over $746,000 by the close of 2035. That's some incredible potential growth. Now, we don't know if the experts' predictions will happen, but owning a diversified portfolio that includes an appropriate amount of cryptocurrency could pay off. Fortunately, buying Bitcoin's never been easier, even in a tax-advantaged retirement account. Whether you have a workplace retirement plan or an individual retirement account or IRA, we'll review the main pros and cons of owning Bitcoin inside it. Hey, I'm Laura Adams, an award-winning personal finance author and Money Girl podcast host with over 43 million downloads. For over a decade, I've helped millions of readers and listeners understand how to manage money and build wealth. Our goal is to offer tips and advice that you can put into action for more financial security and success. Let's start with 3 primary advantages of owning Bitcoin in a retirement account. Pro number 1 is cutting taxes. No matter what investments you buy, owning them inside a retirement account gives you terrific tax advantages. Let's say you purchase $5,000 of Bitcoin in your Roth 401k and the value explodes to $500,000 by the time you retire. Contributions get taxed upfront with a Roth, but your withdrawals in retirement are entirely tax-free. That means you'd avoid paying capital gains tax on $495,000 of growth, a massive savings. Therefore, if you believe Bitcoin will grow in value over the long term, owning it in a workplace retirement plan, an IRA, or a self-employed retirement account could be an excellent way to defer or avoid taxes on its potential growth. Pro number 2 is simplified tax reporting. You must report gains, losses, and interest income on your taxes if you own Bitcoin or other cryptocurrencies in a regular taxable account. While crypto exchanges are trying to simplify tax reporting, they have a long way to go. Therefore, an upside to owning Bitcoin in a tax-deferred or tax-free account is avoiding the hassle of including often complicated details on your tax return. Pro number 3 is diversifying. A critical part of successful investing is diversifying or owning a mix of investments that react differently to various market conditions. For instance, you're in trouble if all you own is Bitcoin or one tech stock and its value plummets. However, the loss is negligible if that investment is just a small percentage of your overall portfolio. If it's right for you, adding a measured amount of crypto to your portfolio exposes you to digital assets, giving you more diversification. Now, let's switch gears and talk about 3 downsides of investing in Bitcoin in a retirement account. Con number 1 is experiencing short-term volatility. You've probably heard that crypto has historically taken investors on a roller coaster ride of highs and lows. However, over the long term, Bitcoin has skyrocketed. So before buying Bitcoin, make sure you're comfortable with its inherent price fluctuations in the short term. For instance, Bitcoin isn't a good choice for someone averse to risk or with a short horizon and not a lot of time to ride out any downturns. The second con is unclear regulation. Whether you're for or against crypto regulation, consumers must understand that there are no clear policies or consumer protections. Bitcoin isn't backed or insured by the government or any institution. Retirement accounts use crypto exchanges like Coinbase to set up and hold your assets. That means your digital assets are only as safe as the exchange your retirement account provider uses. Con 3 is paying higher fees. Since a custodian manages retirement accounts, they charge management fees on top of individual investment transaction fees. Owning Bitcoin means paying even higher fees for services like security, custody, IRS reporting requirements, and crypto exchange fees that get passed along to investors. However, if you believe Bitcoin is an excellent investment, buying it in your retirement account is a smart way to own it. To learn more about investing in cryptocurrency, visit finder.com. Thanks for watching. If you like this video, please subscribe. You'll get notified when there are more helpful product reviews, money tips, and advice.